NASDAQ down 4.5%. SPY 3.5%, and the Dow down 2.5%. Stocks are getting absolutely obliterated. VIX is up 20%. We have crypto, what is really shit in the bed. We have a bunch of news on the stable coins. Touch on that in a separate video. Bitcoin's down at 23,000. What the big news is really in the bond market. The 2-year making humongous moves over this past month, mainly these past 5 days, where the 2 years at 2.3%. Humongous moves. This is something that is really impacting the market. The 10-year too, when we see yields just spiraling out of control in an upward motion, that is signaling very, very bad times ahead. 10 years at 3.4%. And even worse, the DXY over 105. We see a humongous pressure coming in when the Dixies increasing in value, because when the dollar rises, it's going to suck everything, all the air out of everything else, as that is the backbone of the entire global monetary system. But this is not an unorderly decline in the markets. An unorderly, like, we're down what, 3.5%, 2.5%. This is still within the Fed's expectations. And in fact, I think the Fed, this is exactly what they want, because they want to reduce demand, and they're going to do that through asset prices coming down. And because their main goal right now is to stomp inflation. What is the real issue here? These bonds continue to spiral out of control, and the dollar especially continues to go up to 110, 115, 120. That's when we could start to see the Fed start to reverse course. The reason is because that's going to put extreme pressure on the credit market. And if the credit market starts to freeze up, then everything can really start to go to shit. And we will see an unorderly decline. The Fed does not want to see a 20% decline in a 5-day period. They want to see a 20% decline in a 5-year period, because they want to incrementally try and reduce demand, and doing that through asset prices. As stocks really, if they get obliterated and asset prices are just tumbling and liquidity really starts to dry up, then they'll reverse course. But we see no signs of that happening right now, except what we see bubbling under the water. And that's where we see these yields really starting to spike. I have not yet looked at junk debt, but I would assume a lot of that credit, those are really starting to spiral out of control. Mortgages are just going through the roof. And the dollar, that is one of the most important things to look at right now. What is the Dixie doing? If we continue to see these humongous rises in the dollar, I can assure you liquidity crunches will happen. It will start in some of the more poorer countries, but it will work its way up across the global monetary system, because everyone is reliant upon dollar-denominated debt and transferring their currency into dollars. Well, what do we expect for the rest of the week? We have FOMC Wednesday. I do expect them to just keep on raising by 50 basis points until something breaks. When will something break? That is going to be dependent upon what happens with yields and the dollar. Who knows when or if and how long that will take? No one knows, but it will happen eventually, just because they are sucking liquidity out of the system.
Yeah. And I guess we've got PPI coming up, and then on a Wednesday is I think when the FOMC minutes get released at 2 p.m. Eastern is what I recall. So anyways, Manarino's arguing that the market's a 50% basis point hike priced in, but if it comes in higher, that or the Fed wants to show that the more assertive there's that. And then of course, you have the third time in a stumble, the third consecutive time that the Fed's raised rates. So we'll see if that plays out. One of the arguments that's put forth by the Bitcoin guys is that Bitcoin is a hedge. It's a risk-off asset. And what you see, or at least what we have seen so far, at first it seems to suggest the opposite, in the sense that Bitcoin might be the most stable of the cryptos. But nonetheless, when people want to pull back from risk, they're pulling back out of the crypto space in general. And that means they're pulling out of Bitcoin. Yesterday evening, Celsius announced they were basically suspending withdrawals. And so that you typically don't suspend withdrawals if everything's in good working order. You kind of suspend withdrawals and declare a self-imposed bank holiday if you don't have the goods, or there's a run on the collateral that you have. You don't have enough of it to meet withdrawal redemption. So curious to see how that plays out. Binance had some issues. CZ said it was just due to a technical side. I don't know that. I am not sure how long it has taken them to get fixed, if it has been fixed. But again, someone like Binance, with the firepower and the budget that Binance has, I would assume that they probably would not be as susceptible to technical issues as a small guy. But nonetheless, if they get it fixed in an hour, whatever. If it takes them a day to fix it, what's going on there?
It's most likely not a technical issue. What is really sus is when we see these 10% down moves in Bitcoin, we do see a lot of these firms start to get shaky, because as we noted before, bear markets find what audits cannot. And when a firm actually has some instability, when shit gets shaky and Bitcoin's down 10, 13% of the day, they're going to see their shit start to freeze up. We're going to see this in a lot of different places. This is not even an unorderly decline. What happens if this 10% turns into a 50% correction in just a few days? What happens to the bigger players like Tether and Coinbase? I do suspect trends like this to continue. But whatever your thoughts are in the crypto market doesn't matter. A lot of it is built upon Ponzi schemes. Just because it is a new decentralized finance and people are going to try and take advantage and build up and try and make this easy money. I mean, think think about Luna, it's literally just an algorithm that they did to try and peg it to literally nothing. And a lot like Bitcoin. Like, what is Bitcoin backed by? You say it has a fixed supply cap, but to what? I mean, you could say rocks in the world has a fixed supply cap. People are adopting it, but that's still just because they have the confidence in Bitcoin. There is nothing that is actually backing these things except the confidence. It's the same thing with fiat. There's not a single difference besides that there's a supply cap, but you can still have unlimited supply. To me, it's just, I love Bitcoin long-term philosophically, but there's just a lot of fundamental flaws that I see with it that are preventing me from buying it right now. I would absolutely hands and fist be picking up Bitcoin if we get down below 15, 10,000. That's really the range that I'm looking for, just because I do think that Tether will blow up during this cycle. I also have a hatred of Tether, so don't take my word for it. Are you buying the dip? Are you looking to sell? What are your longer term and medium term views looking like?
Well, the long term is that we continue to sell, but that's more real estate. And the thing is with real estate, it's like the exact opposite of like trading or whatever, right? It's like you enter a position, you don't think about it for a year. Like the fact that like, oh, you enter a position, you immediately sell out, like that's very, very foreign to me. But that's my problem, not anyone else's. But yeah, no, very much like to get back into real estate. But again, we have to see where interest rates go, and we have to see what happens with the supply side. Supply still, at least in the markets I keep an eye on, is still pretty constrained, although you are starting to see demand start to cool off, which is what you'd expect going into this. But anyways.
Yeah, personally, I'm not buying, but just because there's a humongous opportunity with the GME cycle, we'll have a separate video completely going into every single position that we have on. But I do see a lot of opportunities, especially in shipping. I mean, they're just producing cash flow. Today, a lot of those companies got below their 1 PE ratio, like literally, like they have more cash on hand than their balance sheet because we saw humongous downward pressure in the market today. I do suspect that a lot of these shipping names to catch a bounce, but the only problem is there's better opportunities in the market. When you look at these GME cycles, how predictable they are starting to get, makes it extremely favorable to go into that instead. Separate video though. As the market as a whole, I would still be a seller. I did sell some of my NASDAQ puts today just because we were down 4.5%. IV was spiking, and I do want to free up capital as much as possible to play this cycle as maximally as possible. I'm still a seller of the market, but I don't know what's going to happen. I had to pick a direction, I'd pick down, but that's just gut feeling. To wrap it up, a humongously volatile day, but this is still not an unorderly decline. No matter how big you are, you're still going to get filled on pretty much any position. What you would want to watch for if we were going to have a flash crash style event is when these big players stop getting filled and the bid asks really start to widen. We are not seeing any of that. We don't see credit freezing up. So this is still going as the Fed's plan. Will that continue? I personally don't know. I don't have a side in that fight either. So thank you, and we'll see you in the